Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Friday, March the 14th, 2025. Pretty quiet a session overnight, not a huge amount going on. What we did just hear is that there was sort of an agreement, a sort of word of an agreement in Germany between Sir Friedrich Merz, the Chancellor to be, and the coalition, especially specifically the Green Party. So the point of all this is that means that the spending bill could go ahead, and there could be a compromise with the Greens, and so that means that spending bill they talked about spending, 400 billion euros on infrastructure and another 400 billion on defense, et cetera, et cetera. The Greens had voiced a little bit of opposition, but it looks as though that the compromise has been found. And just interesting, no surprises to look at the price action here. You can look down here on the bottom right-hand corner. You can see on the 3-minute chart, so a short-term chart. Just when we got that news around about, I think it was 6:30, 6:40, the Bund selling off quite a lot in Germany, but also in sympathy, we see the Italian bonds above here, the BTPs selling off. So what's happening is that all over Europe, this extra spending in Germany is putting up sort of the nominal yields in Germany, and that's going to start spreading out towards like France and Italy. And it's going to be interesting because after the bell today, at the end of the session, we get Fitch, who's going to do a review or release the results of their review of French debt. And we know that the French fiscal situation is under pressure. Probably won't be downgraded. They were kind of put on alert a few months ago, so it's probably too early for a downgrade. But the thing for me is interesting is at what point will the pressure on German yields, and you see here the German Bund going down in price and the yield going up, at what point will that really start to spill out across onto the spreads? So that's something interesting to look at. In terms of the spreads here, we're at about 106 here on this chart, but you see the same time here, you've got the euro going up. So the euro liking that. And if we actually then look at a couple of the other markets over in Europe, we can see that the euro stocks, this is on the futures, I think, yeah, so seeing the pretty nice big sort of green day there on the euro. Let me just take off this on the euro stocks. So the European stocks liking that. In Germany, I assume it's the same thing. We've got the DAX. Do I have the DAX? Yeah, nice green. So the German stocks up, the European stocks up, the yields up, euro up. So it's sort of a bit of a risk on day. So let's see if that sort of translates across to the US. Well, what we're seeing in the US, we are seeing a little bit of a bounce. This is a daily chart here of the ES futures, and you can see a little bit of a daily bounce here. This is a pretty key level at this point on the Fibonacci. Now, this is the Fibonacci going back, drawing it from the 5th of August. So that's the most recent impulse from 7 or 8 months ago. And you can see that this level around about 55.20-ish is a very key level. That's providing a little bit of support. But this price action here is extremely weak. The only thing I could possibly say is that if you start looking at a bunch of sort of, stochastics and indicators and whatnot, you can see here that we're down at the bottom of the Bollinger Bands. You see here the Bollinger Bands. We're well under all the moving averages. So all the moving averages. So you see these gray lines. Here's the 20s, the 50s. They're starting to roll over. So definitely we're in a downtrend. We still have a bit more to go on the dailies to go down to the bottom of the Bollinger Bands. You can see, though, that if we start looking at some of the oversold, the stochastics here, like the RSI and whatnot, we are definitely oversold. We're down at, a very low level on this indicator here. And the momentum is definitely on the downward side. So it's one of these things, can it go lower? Absolutely. Is it a bit oversold? Yes. So could there be a bit of a mean reversion bounce? But I think at this point, probably what we will need, of course, is some kind of clarity with Trump and the trade and everything, the trade situation. And it's interesting because we had Scott Bessent yesterday from the Treasury in an interview, and again he seemed to be fairly sanguine, fairly relaxed, basically saying, a detox for the economy doesn't necessarily mean a recession. But he basically was very clear that they have a medium-term plan. There could be some medium-term pain. Trump himself again reiterated that yesterday. So there does seem to be coming out of the administration, first of all, a sort of admission that there could be a slowdown, and secondly, a level of comfort with that. Trump said we're not looking at the stock market, so that put, people talking about the Trump put, it could be a little bit further out of the money, so to speak, than people had anticipated. The other thing as well is that if you start looking at technicals, you see here on this fib here, it's pretty key level. If we break there, at that point, you'd have to say that. Possibly you have to look at go all the way back to October 23, 27th of October, and you start drawing fibs like this kind of thing. And then you start seeing that we could get down to, let's say, 5,400 is a pretty key level. And then, of course, you've got the 50%, 5,100, and even all the way down to 4,880. I mean, that's a long, long way away. But they're the kind of levels, if this price action continues, which we might see. So what could reverse that? We have a little bit of data today. We have the University of Michigan. Let's have a quick look at it. Now, again, that is a survey for confidence and inflation expectations. Let's just have a look. That's coming up at 10 o'clock. So that's the preliminary for March. And it's always interesting, but probably more for the inflation expectations, although it's not my favorite indicator here because it is a survey and it's pretty limited. And we had Powell on Friday just essentially saying that in the past, what did he say? He said that consumer confidence surveys didn't necessarily correlate well with the future spending patterns. So the point being here is that even if in the past people were talking about sort of a lack of confidence, the American consumer has held up. So possibly what's going to be more important in terms of the health of the American consumer, rather than the University of Michigan today, will actually be on Monday. We get the retail sales numbers for February. So that's probably got to be a little bit more important for the market in terms of trying to gauge where the U.S. consumer is, where the U.S. sort of economy is. So not a huge amount of data today. I think Trump's signing some stuff at 12 o'clock. In terms of other news, just looking overnight, we looked at the stocks. If we look at the currencies, we can see that the US dollar in general on the dollar index not having a great moment. That's mainly, again, probably because of euro strength. If we look over at something like the Japanese yen, that's weakened a little bit. So you see the USD going up against the Japanese yen. And it seems to be that overnight, one of the big sort of trade unions, sort of big union movement in Japan, the Rengo, the wages announced, they're saying an average of about 5.6, and the expectations were for about 6. So the point there is that the wage increases were less than expected. And in theory, that would put less pressure on the Bank of Japan to hike interest rates. And so there was some kind of extrapolation from that, which would be sort of weak for yen, basically saying maybe, there was less of a chance of the BOJ hiking. But if you actually look at what's priced in, and we can check that out now, just kind of quickly, let's just have a look and see at the BOJ, which we can find. Where's the BOJ Japan? So at the next meeting here in excuse me, in March, basically excuse me, I'm just going to grab some tea here. I have a scratchy throat. We can see that even if the next meeting coming up in next week, zero chance essentially of a hike. But what's interesting is that once we go out to May, the market's only pricing in a 14% chance of a hike, or 4 basis points in terms of the numbers, and the market's really saying not pricing in a full hike until sort of the end of the year, basically the end of October. I think that could be mispriced. That's an interesting one because the reality is that even if you say that wages are not going up 6%, by going up 5 or 5.5%, that still represents a wage pressure, more sort of money in Japanese workers' pockets, which will put some upward pressure on inflation and could drive consumption. So the point is here that it's an interesting one to look at that. Let's see what Ueda has to say. But I think the chances of the Bank of Japan hiking before the late October meeting is a possibility, and therefore just getting back to the USD JPY, if that's the case here, and we see maybe a slow weakening of the US dollar over the year, again, one could argue that it could be a question of trying to sell rallies, and maybe something at 152. If the USD JPY does get up to that, could be an attractive level to consider a medium term short. In terms of the other currencies, we looked at the euro. You see the euro, looks like it wants to retest up towards 109.5 again. If it gets up there and sort of holds, you have to say that it could sort of break through a little bit further. In terms of other risk currencies, you see the Aussie dollar, up about 37 basis points, not a huge amount. We also see that the New Zealand dollar up a little bit, 50, 60 basis points, and CAD, this is USD CAD, pretty flat. But if you go back to something like the Aussie and the Kiwi, there was some sort of overnight comments from the Chinese authorities saying that their main focus in 2025 would be sort of internal consumption, stimulating internal consumption. So at the margin, that's a positive. But we have to keep in mind that the US has put tariffs on China. China has retaliated, even in a pretty low-key way. So I think that story is not completely finished yet, and really something we should be looking at, starting to really to pay attention to here is the Chinese renminbi here, or the yuan, which you see is sort of some, sort of just sort of drifting. USD is just kind of drifting down. Very, very key level above at 7.36. That's like a triple top going back a long way. At this point, the Chinese authorities haven't done much. As I said, their response has been pretty low key to Trump. They're not seemingly wanting to, weaken their currency at this point, because they could weaken their currency to combat tariffs. But on the other hand, one of the kind of more serious longer term goals of the Chinese authorities is to present the Chinese renminbi as a kind of alternative as a global reserve currency, over the next 10, 20, 30, 40, 50 years. That is sort of a long-term goal for the Chinese sort of authorities. And therefore, they're careful about playing with the Chinese renminbi too much, because they want to keep it as a stable reserve currency. The more stability, the greater the possibility of it becoming sort of a reserve currency. So just interesting there to keep an eye on that. Not a huge amount going on there just at the moment. In terms of other markets, we've got the precious metals continuing to sort of blow out. So gold here, this is on the spot price, priced in dollars. We can see that it had a little retracement and it kind of blew through recent highs. So now basically at all-time highs, and that's signaling some concerns about inflation. I mean, we had the PPI yesterday and the day before the CPI. The headline numbers, they looked quite good, a little softer, but digging in a lot of the core components, a lot of the components which feed into the calculations of the PCE number, which of course is the Fed's preferred metric, they were actually sort of stable or even sort of a little sticky and going up. And so that's why the market looked at that and went, bond yields had to go up a little bit, and essentially saying that, inflation is still a little bit sticky. And gold, I think, is, not only global risk off and sort of central banks, changing the balances of their reserves. But I think it's also a bit of an inflation hedge here, and you can see that gold looks as though it wants to test the upside of this channel. That was when I last drew this at about $3,000, nice psychological number as well. But it looks as though gold may want to test this uptrend of this channel, which could be something like, I don't know, 3,030, 3,040 up here. Silver also having a pretty strong breakout. It hasn't quite retested its highs yet, but this is certainly strong price action. That's going to be led by gold in a certain sense. Copper also breaking out. But as I explained the other day, I think on the video, a lot of this, there's a huge differential between the price of this contract, which you're looking at here, which is traded on the US New York COMEX, compared to, let's say, the London Metal Exchange or in China. And the differential there is that there's been a lot of physical copper brought into the US in order to try and front run tariffs on copper coming into the US, which were announced putatively by, I think, Lutnick the other day. So the point is here, it's difficult to know if this is real demand for copper, risk on sentiment, or whether this is simply a function of inventories at the COMEX exchange in New York. And we saw that squeeze with gold, a few weeks ago as well. I've been looking at those numbers. So interested here to see if this can maintain this. I mean, it did fail before at this kind of double, triple top. You see here at around about 4.85, had a little retracement and now is spiked higher. Okay, at this point, we have to say that the chart is bullish, but I have my doubts. Apart from that, guys, that's about it. The US bonds We had a slightly soft 30-year auction yesterday, just tailed by about a basis point. Not a huge problem. At this point, I think the market's just trying to get a bit of clarity about Trump's sort of tariffs and also this narrative of whether the US economy is indeed sort of slowing down. I think we're not going to have too much action today. Probably more that will start next week when we have retail sales give us more of a sense, as I said before, of where the consumer is. We have the Fed in its blackout, so the Fed won't be speaking all next week. So I think a relatively quiet day today. Probably a little bit more action in geopolitics in terms of Russia, Ukraine. There's a talk of a peace deal there. Potentially, although Putin is starting to put, a lot of conditions. And of course, let's just keep an eye on what's going on in Germany. We have the next major decision in Germany on that budget coming on Tuesday, on that sort of spending bill is coming on Tuesday. So that's probably going to be more like the crunch, although it does look as though things are moving towards that. Oh, just finally, guys, just wanted to have a quick look at volatility. That is coming down a little bit, which is probably helping the stocks in the US and just risk on in general. And you can see here, I think I've got that here. Yeah. So if we look at the volatility curve here, this is the spot. So it's still pretty high, though. Let's not forget that this is high. So we can expect some volatility intraday with 24 handle. That's quite high. And again, as you guys can see here, it's well above, well in backwardation ahead of the first, second, third futures contract. So that does indicate volatility. And as long as VIX stays in the 24s, 23s, above 20, that we could find it difficult to have consistent rallies. That's all I'm trying to say. So my personal mindset is still a sell the rally kind of mindset rather than sort of the buy the dip. Having said that, if you compare it to yesterday, so just going to pull up yesterday, which is in the orange, you can see that in the orange from yesterday, we have come down in absolute terms. So that's not too bad. Just finally, just have the oil curve here. Oil having a little bit of a bounce. There's some talk about more sort of sanctions on Iran, on Russia. Again, if you look compared to yesterday at the oil curve, I'll just zoom in to make that easier. You can see that the white line is the live data. So we are up a little bit more compared to yesterday. Not bad. So oil, again, looking at that chart, it's still, the bulls have to do a huge amount of work. And we'll just have a quick look at that to finish off here. So looking at the CL1 contract, you can see there's been a little bit of a bounce off these sort of lows. And there's a bit of an uptrend going back here around about 65, 70. But the point is that, if I were to draw some kind of fib retracement here, let's say even from this recent impulse around here, you can see that we haven't even managed to get, it failed even before a 38% retrace. And if I draw an impulse, a fib line going all the way back to this down impulse from the 14th of January, you can see that we're miles away still from even a 38% fib retracement. So at this point, you've got to say the price action, it's nothing. We can expect a little bounce here. And again, even just looking this morning, a fairly pathetic bounce. So nothing much going on here. I think the only way that oil will bounce is if probably there's some kind of risk on, peace in Ukraine, and there's a lot more clarity on the Trump tariffs, global trade situation, and B, the US economy. We need to see the US economy definitely not slowing down, and we need to see further signs of expansion in Europe and probably in China. That's the only way, really, that oil, I think, could have a significant bounce, because we know, on the other hand, from the supply side, that OPEC Plus is very, very slowly opening the spigots a little bit and sort of pouring more oil into the global markets. So it looks as though, there's plenty of oil out there. There's not a lack of oil. So it needs really sort of a sentiment to change. And at this point, as long as it continues to trade heavy like this, it wouldn't also surprise me if we do get a final puke downwards, just to kind of clear out, trigger all these stops down here, maybe even something down to where I've put sort of a buy box here, down like 64, 63, 62. Might just need a final little flush. Okay, guys, I'll leave it there. Have a great day and eventually a great weekend. I'll be talking again with everyone. Thank you.